morning trade live. Let's focus on Alphabet. This stock is the clear outperformer in the Mag 7 over the last 12 months. The parent company of Google is up more than 75% year over year. The only other Mag 7 that's up more than 30% during that time frame is Nvidia. Meta, Microsoft and Amazon are all down in the last 12 months, and we are trading higher on Google right now to the tune of 0.2% at $315 and change. So that is the focus of the morning trade. Joining us now for a closer look at this name is Jenny Horne. Very good morning to you, Jenny. Hope you had a nice weekend and staying warm there. Wells Fargo upgrading Alphabet this morning and raising the price target. Just talk us through what exactly went behind this call.
Well, I will say Wells Fargo highlighting the fact that, first of all, a $387 price tag is optimistic, but they did note that Alphabet has this leadership position in the three key traits of an AI, for being an AI winner, which is customer data, distribution, as well as compute capacity. And so they did say that their capacity analysis confirms Alphabet has an opportunity to exploit data and distribution advantages for these consumer and enterprise AI products. They also did highlight the fact that Project Google does expand their compute capacity to 35 gigawatts by 2028 from 15 gigawatts that they had just at the end of 2025, which then extends their lead relative to some of the hyperscaler peers that they see. So overall, highlighting that capacity is king. We've definitely known that to be true as we've really dissected a lot of these hyperscalers that, frankly, have not been quite as resilient as Alphabet has been in the last, 12 months, as you pointed out, but really in the last back half of the year. So Alphabet is really, if you look overall, one of the highest conviction large cap ideas amongst analysts, as we've seen improving earnings revisions, AI strengthening, not threatening its ad model, and less regulatory downside as we approach the rest of 2026. So consensus I was seeing was still strong buy, or definitely buy leaning. The average price targets right now fall between roughly $350 to $370 a share, which does imply roughly 10 to 20% upside from where we closed last week. And so no meaningful sell ratings. And again, 387 is where now Wells upgraded shares to. And so that would actually be even more optimistic than the bulk of analysts that are already fairly optimistic on Alphabet shares, Sam.
Yeah, they certainly had been, but as we saw post-earnings, I mean, this stock had come off quite considerably on some of the capex indigestion that we'd seen. It was $185 billion that they'd sort of penciled in for 2026. But it's interesting with this note, Wells Fargo, as you say, is really narrowing it down to being capacity that they say is king right now. And I suppose Google Alphabet is very much seen as having a lot more sort of spending discipline, maybe than some of the others, but also these sort of more advanced AI partnerships as well. I did see that Wells did actually lower the price target on Amazon. They have been talking about, the capacity here as well. Meta actually got a price target bump from this. But what are you seeing as far as the Mag 7 performance, particularly post-earnings, as we head into, obviously, what we're going to be getting from Nvidia, as to how things are shaking out for some of these big names?
I will say that it does seem overwhelmingly so. Like the bearish theme, we could say, for all of these names, frankly, is the heavy AI capex spend that could at least limit or just dampen some of the near-term margin expansion. And so Alphabet has been the steady compounder, not a true AI trade like Nvidia, but I think that that's important, right? I mean, I think that the de-risk to be so heavily tied to being an AI performer is not necessarily a bad thing. I mean, we saw actually last week Apple traded at its lowest correlation to the NASDAQ 100 that we have seen now in almost 2 decades. And so I don't think that that's necessarily a bad thing. For a name like Alphabet in particular, you have so many areas of revenue that are outside of just that Google cloud. I know it's like the fine line between what does the market care about, what does us as consumers frankly care about, and we tend to pay more attention to what the market cares about, which is their cloud. But the difference between Alphabet and its cloud capacity and say I would put Alphabet as well as Amazon in the same bucket. Meta's a bit different because Meta's capacity is only for Meta, whereas other major enterprises rent from, say, a name like Alphabet or Amazon, which I do think adds a bit more resiliency, not as of late, but in more the long-term picture for Alphabet.
Yeah, something to look at. We've just actually dipped lower on Google Alphabet this morning, but let's wait and see. Jenny, thanks so much for joining us this morning and getting us across some of the details there. Let's trade it now with Charles Moon, stock strategist at Prosper Trading Academy. Very good morning to you, Charles. How are you approaching your example trade for Google this morning?
A lot more short term. This market has been touch and go and still remains that way. as long as we're, saber rattling towards Iran. And this is kind of the cloud that's been hanging over the markets. Initially, it was the SCOTUS opinion with tariffs. We're still kind of dealing with the fallout, and the market's trying to digest that information that came out Friday. But right now, it seems that, things are a little bit more bearish across the board versus bullish. We've been kind of bouncing back and forth in this volatility. The VIX remains above 20, so I like keeping things short term. I'm looking at Google as a fade right now. As long as they remain below 320, I think it's a short. So I'm looking at a short dated option, March 2nd. I'm looking at the 315 puts, trying to buy them at 525 or lower. I believe the risk shouldn't be more than 50%. I think the initial gain should be taken at 50%. But if they roll over underneath 310 in the near term, they could just start breaking down to $300. We've seen a lot of these tech names kind of get the fade, the reversion plays. We used to be in a buy the dip market, and it just kind of, we were getting this little, more macro negative outlook on tech, especially with companies that have had higher CapEx expenditures. Amazon's gotten severely punished, and, Google's held up relatively well. But in this environment, resistance is going to play a lot more prominent role than support will.
All right, thoughts on the market this morning? We've got the Dow almost down about 700 points. Obviously, we've got Mother Nature, we've got Iran, we've got AI disruption fears, credit risk concerns as well. I suppose it all makes sense, not to mention, obviously, with the tariff uncertainty and that remaining elevated. What are your thoughts this morning?
Yeah, that's exactly what we're seeing. I was just looking at the financials. They're getting rolled over pretty hard today. They're probably the biggest weight on the Dow right now, with JP Morgan and Visa down quite a bit here. And we're seeing fiduciary services as well working lower. So it's a very, very broad reaction in financials. The tech concern still remains, very prominent. We saw cybersecurity names turn down on Friday on the Anthropic news. And, we're seeing a little bit more demand for precious metals and, some of these consumer staples. It's a big reason why Walmart's been such an outperformer. Apple today is showing a lot of strength, but names like Procter & Gamble, when I turn to them and I see they're up and the markets are down, it just seems like a bit of flight to safety, and the market's just looking anywhere to at least play out a hedge or to look to take opportunities. So the overhang of the markets is all about news right now. The market's going to react to news, and as long as the VIX tries to remain above 20, the buyers have to be really careful in the near term here.
Yeah, and an aggressive sell-off very much in software continues today as well. I mean, stocks down 7, 6, 8% as well, as we can see across the board. Charles, really appreciate it. Thanks so much for joining us today. That is Charles Moon there, stock strategist at Prosper Trading Academy.